Welcome to the deep dive. Today, we're cracking open a recently filed prospectus. We want to get a real understanding of a company operating right in the heart of India's renewable energy sector.
Yeah, and our mission basically is to pull out the most crucial bits, the interesting nuggets from what's, let's be honest, a pretty hefty document.
Exactly. Give you, the listener, a clear view of what's actually going on, sort of cutting through all the jargon and noise to get to the core stuff.
And our source for this is the document 17313890696164.pdf. It's dense, like I said, but we'll break it down.
Okay, let's start with the basics. Who are we actually talking about? The name isn't explicitly stated in these bits we have, but we do have identifiers.
We do. The corporate identity number, or CIN, is U40106HR 2015 PLC 102129.
Right, and that CIN is like, it's unique fingerprint in India, isn't it? Helps track it officially.
Precisely. And we know where they're based. They're registered in corporate office, Plot Now 152, Sector 44, Gurugram 122002, Haryana. That's a major business hub.
And if you needed to contact them, the prospectus lists Rajesh Sodhi. He's the Assistant Vice President, Company Secretary, and Compliance Officer.
Yeah, got the phone number, +91 124 717 7000, email css.acme@acme.in, and a website, www.acmesolar.in.
That website name, acmesolar.in, that pretty much gives the game away, doesn't it? Sounds like solar is their main thing.
Strongly suggest it, yeah.
Yeah.
We also know the promoters, let's see, Mamta Upadhyay, Manoj Kumar Upadhyay, then two companies, ACME Clean Tech Solutions Private Limited, and MQ Holdings Private.
So a mix of individuals and corporate entities driving this.
Looks like it. These are the key backers.
Okay, now this document, this prospectus, it's all about an offer of equity shares. And we should probably state the obvious right up front. Investing in shares, well, it always carries risk.
Always. You could lose everything you put in. It's fundamental, but yeah, worth repeating every single time.
And the prospectus itself leans into this, right?
Absolutely. It explicitly says SEBI, that's the Securities and Exchange Board of India, hasn't recommended or approved these shares.
And SEBI doesn't guarantee the document's accurate either.
Nope. That responsibility, it lies squarely with the company. They have to stand by what's written in there.
Makes sense. They're the ones putting the information out. And what about selling these shares outside India?
There are restrictions. Basically, if you're in another country, you need to make sure offering or selling these shares complies with your local laws. So the main push is likely domestic within India.
Got it. Now, reading through something like this, you always come across forward-looking statements. What are those exactly?
Yeah. Think of them as the company's educated guesses about the future. The prospectus even gives examples of the kind of language used.
Like expect, estimate, intend, likely to, things like that.
Exactly. Plan, projected, should, will continue, seek to, will pursue.
Yeah.
When you see those words, it signals they're talking about predictions, hopes, plans, not guaranteed facts.
So it's what they think might happen based on what they know now.
Precisely. It's their current view on their finances, operations, strategy. But it's all subject to change. Loads of risks and uncertainties could mean the reality turns out, well, quite different.
Okay. The prospectus also talks about stuff like contingent liabilities and any ongoing legal issues. Why are these important for potential investors to know about?
Contingent liabilities are, well, they're potential future obligations.
Yeah.
Things that might become liabilities depending on some future event happening or not happening.
Like a lawsuit. If they lose, they owe money, but if they win, they don't.
Exactly like that. The prospectus points to specific spots for the details, note 48 in the financial statements, the management's discussion section, and the bit on outstanding litigation. Pages 492, 536, and 583 if you want the real nitty-gritty.
And there's one specific case mentioned, wasn't there? Something about minimum wages.
Yeah, a complaint filed back in 2020. It alleges a violation of the Minimum Wages Act, 1948. It named ACME Clean Tech, that's one of the promoters we mentioned,
Right.
along with Manoj Kumar Upadhyay, another promoter, and an entity called ACME Solar Energy.
Interesting that it involves both a promoter company and an individual promoter, but it's counted as just one case.
Yeah. The note says it's accounted for only once, despite naming multiple parties. It kind of hints at the interconnectedness between these entities, maybe in their operations or how they were managed at the time.
Speaking of connections, the document also flags related party transactions. What are those and why do they get special mention?
Okay, so related party transactions are basically any business dealings between the company and its insiders.
Insiders like?
Like the promoters, their subsidiaries, key managers, maybe even their close relatives. Now, these aren't automatically bad.
But they need a closer look.
Definitely. You need to ensure the deals are fair, conducted at arm's length, meaning on terms similar to what they'd get with an unrelated party.
Yeah.
It's about making sure the company, and by extension, its future shareholders, aren't being disadvantaged.
To avoid any self-dealing or, sweetheart deals.
Exactly. The prospectus directs you to several sections for the details on these, like the summary of related party transactions and parts of the business, industry, and financial sections.
Okay, let's shift gears. Revenue. Where's the money actually coming from? Who are their main customers?
Looking at the figures for the 3 months ending June 30th, 2024, and the same period into 2023, the top customer, by a decent margin it seems, was the Solar Energy Corporation of India, or SEI.
SCCI, okay. That's a big government entity involved in solar energy development.
Right. Other major ones listed are Telangana State Southern Power Distribution Company Limited and Maharashtra State Electricity Distribution Company Limited. These are state-level distribution companies, the ones who actually buy the power.
So a lot of reliance on these large, often state-owned or state-affiliated power purchasers.
That's typical for utility-scale projects, yeah. The prospectus provides the revenue figures and percentages for each.
It also mentions something about historically relying on ACME Cleantech, the promoter for importing solar panels, and a tie-up with Envision for wind turbines.
Yeah, that's interesting. It tells us about their supply chain, at least historically. Relying on a promoter company, ACME Cleantech, not just for panels, but also as the EPC contractor.
EPC being engineering, procurement, and construction, so building the projects.
Right, and providing O&M operations and maintenance services afterwards.
Mm.
Given they're a promoter, you'd want to understand the terms of those arrangements, make sure they were competitive. The Envision tie-up seems to be for their initial move into wind power.
So ACME Cleantech wasn't just a promoter, but also historically the top supplier and service provider.
That's what the text suggests, yeah. Acting as the EPC and providing O&M.
Okay, let's talk about hurdles. The document mentions risks around land acquisition and project development. How big a deal is this in renewables?
Oh, it's huge. Absolutely fundamental. Finding suitable land for big solar or wind farms, it's complex. You need the right resource, good sun, good wind, but also clear title, permits, grid connection access, community acceptance.
And if they fail to secure the land?
It can really hurt. Penalties under their agreements, maybe lower tariffs for the power they eventually sell. It directly hits the project's economics, the bottom line.
The prospectus notes that as of June 30, 2024, a lot of their operational projects are concentrated in just 3 states: Andhra Pradesh, Rajasthan, and Telangana.
Yeah, and it mentions these states apparently have better solar irradiance, according to a CRISIL report, which makes sense for solar projects.
But does concentrating in just a few states bring its own risks?
It definitely introduces geographical concentration risk. If there's a major policy shift, a natural disaster, or grid issues specific to those regions, it could impact a large slice of their generating capacity all at once.
And beyond land, there are other project risks mentioned, like delays and cost overruns.
Always. Construction delays, unexpected cost increases, underestimating how complex building these large projects can be. These are constant risks in infrastructure development. They can erode profitability quickly.
Another major dependency highlighted is on power purchase agreements, PPAs. We mentioned the buyers earlier, but why are these contracts themselves so crucial?
PPAs are essentially the lifeblood of these projects.
Yeah.
They are the long-term contracts, often 20 or 25 years, where a buyer commits to purchasing the power generated at a pre-agreed price.
So they provide revenue certainty.
Exactly. The entire financial model, getting loans, everything hinges on having solid long-term PPAs in place. Any issues with these agreements, a buyer trying to renegotiate, delays in payments, or difficulty securing new ones for future projects, that's a major risk.
The document includes something called unaudited pro forma consolidated financial information. What's that about?
Okay, pro forma means as if. These are hypothetical financials showing what things might have looked like if certain major events had happened earlier.
Like the example given the divestment of 15 companies in fiscal 2024.
Right. It shows the potential impact of that divestment on past results.
Yeah.
But the key word is unaudited, meaning independent auditors haven't checked and verified these specific pro forma numbers. They're purely illustrative, helpful for context maybe, but you shouldn't rely on them as a predictor of future performance. Take them with a grain of salt.
Gotcha. Then there's talk of financing arrangements and covenants. Sounds like loan agreement small print?
Pretty much. When companies borrow money, especially large amounts for projects like these, The loan agreements come with conditions or covenants.
What kind of conditions?
Things like maintaining certain financial ratios, maybe debt-to-equity levels or minimum profitability. They're promises the company makes to its lenders.
And if they break those promises, if they breach a covenant?
That can be serious. It can trigger defaults, allow lenders to demand immediate repayment of the entire loan, enforce their security, maybe seize assets or impose other penalties. It can really restrict the company's financial flexibility.
What about paying profits back to shareholders? Any word on dividends?
The prospectus is very direct here. It says there's no assurance of future dividend payments.
And historically,
They state that no dividends were declared for the period from April 1st, 2024 up to the prospectus date, nor for the last 3 full fiscal years, or the 3 months ended June 30, 2024.
so dividends haven't been a feature recently, and there's no promise they will be soon. Investors looking for income might need to look elsewhere.
That seems to be the message, yes. Growth and reinvestment appear to be the priority.
The document also mentions non-GAAP financial measures. What are these, and how should we read them?
Okay, GAAP is generally accepted accounting principles, the standard rulebook for accounting. Non-GAAP measures are metrics the company calculates differently, often by excluding certain items they feel obscure the underlying performance.
So like an adjusted profit figure.
Could be, yeah. Companies argue it gives a clearer picture, but the prospectus itself cautions you shouldn't consider these in isolation or as a substitute for the standard GAAP figures. They can be useful, but you need to understand what's been adjusted out and why.
Right. See the full picture. What about external factors? Things outside the company's direct control.
Yeah, they list the usual suspects: potential negative impacts from natural disasters, severe weather, which is obviously relevant for solar and wind terrorist attacks, civil unrest, or any adverse social, economic, or political events in India.
All things that could disrupt operations or the broader business environment.
Absolutely. They also specifically mention the potential impact of inflation and changes in government economic measures or policies.
There's also a brief mention of FTSA, the Foreign Account Tax Compliance Act. How might that affect things?
FTSA is a U.S. law. It mainly affects U.S. investors holding foreign assets. Compliance with FTSA rules could impact how payments, like any future dividends, are handled for U.S. shareholders. It's more of a procedural note for potentially affected investors.
Okay. For people watching the IPO process itself, there's a note on anchor investors. Who are they?
Anchor investors are large institutional investors, think mutual funds, insurance companies, sovereign wealth funds, who get allocated shares before the IPO opens to the public.
Why do they get early access?
Their participation is often seen as a signal of confidence in the offering. A strong anchor book can build momentum and attract other investors.
Let's talk numbers from the offering itself. What does the prospectus say about the money being raised and the costs involved?
It outlines the gross proceeds expected from the fresh issue, the new shares being sold by the company. Then it estimates the offer expenses:
Which are?
fees for the investment banks managing the IPO, the book-running lead managers, or BRLMs, syndicate members, the registrar, legal counsel, printing, advertising, listing fees, all the costs of going public.
And the money left over after paying those costs is the net proceeds.
Exactly. That's the actual cash the company gets to use. These amounts are given in Indian rupees, in millions.
And do we know how they plan to use that net amount?
Yes, the prospectus states the objects of the offer. It generally proposes deploying the net proceeds for specific purposes, like repaying or prepaying existing debt and funding capital expenditure for new projects. There's usually an estimated schedule for this deployment, too.
What about credit ratings? Do we know how rating agencies view the company's debt?
Yes, it mentions ratings obtained from CARE Ratings and CRISIL Ratings as of certain dates. It also includes their outlook: stable, positive, negative, which gives an indication of the likely direction of the rating in the medium term. These provide an independent assessment of creditworthiness.
Seems like there have been some recent shuffles in the management team.
Yeah, the document lists some appointments and resignations among key management personnel in May and June 2024. Roles mentioned include heads of O&M, HR, legal, and even the chief operating officer.
Does that signify anything major?
It could. Yeah. Changes at that level can sometimes suggest shifts in strategy, operational focus, or just normal churn. It's something to note.
Now, ownership. Who owns the company before this offer and what's being offered?
It details the pre-offer share capital. And the offer itself consists of a fresh issue, those new shares the company is selling to raise funds, and potentially an offer for sale, or OFS, where existing shareholders sell some of their shares. The face value of each equity share is noted as €2.
The prospectus also touches on past share issuances, like converting loans from ACME Cleantech into shares. Why include that history?
It provides context on how the company was funded previously and how the current shareholding structure came about. Seeing conversions of loans or debentures, especially from a promoter like ACME Cleantech, gives insight into their historical financial relationship and the valuation at those times.
Makes sense. And the promoters, their shares are subject to a lock-in after the LPO, right?
Yes, that's standard practice mandated by SEBI regulations. A significant portion of the promoter's shareholding is locked in, usually for 3 years from the allotment date.
What's the purpose of that lock-in?
It's to ensure the promoters maintain skin in the game post-IPO, aligning their interests with new shareholders. It prevents them from cashing out immediately. The prospectus specifies which shares held by the promoters fall under this lock-in.
Are there any exceptions to the lock-in?
Yes, there can be exceptions for certain types of institutional investors, like venture capital funds, alternative investment funds, or foreign venture capital investors, provided they meet specific conditions outlined in the regulations.
And just before this offer, who owned the company? Any shareholders with more than 1%?
According to the document, as of 10 days before the prospectus date, ACME Cleantech Solutions Private Limited held 100% of the pre-offer equity share capital.
Wow, okay, so entirely owned by that one promoter entity right before going public.
That's what it indicates, yes.
There's also a part of the offer set aside for employees with a discount.
Correct, an employee reservation portion.
Yeah.
Eligible employees can apply for shares within this quota, and they're offered a discount specified as 27.000 per share in this case.
What's the logic behind that?
It's a way to encourage employee ownership,
Yeah.
potentially boosting morale and aligning employee interests more closely with the company's performance post-listing.
Okay, back to the money raised, the net proceeds. We know it's for debt repayment and new projects. Does it give more detail on the breakdown or timing?
Yes, typically the utilization of net proceeds section provides a more detailed table. It outlines the proposed amounts allocated to each main objective, like specific debt facilities to be repaid or specific projects to be funded, and gives an estimated timeline for when they expect to use these funds.
And those offer expenses, we mentioned the costs of the IPO. Is there a detailed breakdown?
Usually, yes. There's often a table showing the estimated expenses for each category: BRLM fees, legal fees, printing, advertising, etc., both as absolute amounts in euro million and often as a percentage of the total issue's size or gross proceeds.
How do investors know the company actually uses the money as planned? Is there any monitoring?
Yes, there's a process. The company is required to disclose the utilization of funds quarterly to its audit committee.
The audit committee being part of the board.
Right, typically composed of independent directors. They review the usage against the stated objectives. The company also has to prepare an annual statement detailing how the funds raised in the IPO have been utilized. This gets included in their annual report.
Okay, let's zoom out a bit. The business itself. How do they describe what they do?
They position themselves as an integrated solar power producer in India. They highlight their significant operational capacity, the plants already running and generating power, and also a large pipeline of projects currently under construction. The capacities are given in megawatts in W.
And they mention a CRISIL report highlighting growth in the sector.
Yes, referencing a CRISIL report that apparently points to the strong growth trend for renewable energy installations across India. This provides industry context for their own operations.
Their main focus is utility-scale solar, right? Big solar farms. But they're also moving into wind and hybrid.
That's the picture painted, starting with large solar projects, now expanding into wind power, and also hybrid projects, which might combine solar and wind, maybe with battery storage, in one location.
What's the advantage of going hybrid?
It can provide a more consistent power output compared to just solar, which only works during the day, or just wind, which depends on wind speeds. Combining them, potentially with storage, can help smooth out generation and make the power more reliable for the grid.
What does the company see as its main strengths, its competitive advantages?
They typically list things like having a large and diversified portfolio of projects already operational, strong integrated capabilities covering the entire project lifecycle from development to operation, a track record of good financial performance, and an experienced management team.
Okay, let's talk about the wider industry. What's the overall picture for renewable energy in India, according to this document?
It sounds very positive. It highlights strong government support, ambitious national targets for renewable energy capacity, and various policies designed to encourage growth.
Like what kind of policies?
Things like the production-linked incentive, PLI schemes, aimed at boosting domestic manufacturing of solar panels and components. The PM Surya Ghar Muft Bijli Yojana, which promotes rooftop solar for homes. Measures to improve the financial health of the distribution companies, or discoms, who are the main buyers of power.
And the demand for power is growing in India.
Significantly, yes. And renewables are playing an increasingly important role in meeting that demand while also addressing climate goals. The prospectus also notes a lot of tendering activity for new utility-scale projects by central agencies like SCCI, NTPC, SJVN, and NHPC.
What about costs?
It mentions a fall in solar module prices globally, which generally makes solar projects more economically competitive.
Any other initiatives? Wind power, storage.
Yeah, it touches on other policy measures promoting renewables. It notes India's already significant installed wind power capacity and names leading states. And importantly, it mentions the emergence of energy storage systems, ESS. Basically, large batteries becoming more crucial, with specific tenders being issued for ESS projects.
This all operates within a complex web of regulations, I assume.
Absolutely. The prospectus mentions key regulations affecting the sector. Things like green tariff regulations, rules about sharing interstate transmission charges, grid code regulations for maintaining grid stability with renewables, and the Renewable Energy Certificate, REC, mechanism.
What about trade policies?
It notes the imposition of customs duties on imported solar cells and modules designed to protect domestic manufacturers, and also mentions export promotion schemes. Plus, there are state-level regulations using Telangana's Electricity Commission rules as an example that companies have to navigate.
Diving into the company's history a bit, anything noteworthy there? Changes, deals?
It mentions past changes in their registered office address. More significantly, it details historical acquisitions and disposals of stakes or assets, often involving ACME Cleantech and other related entities. This shows how the group structure evolved. It also summarizes financial guarantees provided by lenders or promoter entities.
And corporate structure details.
Yeah, basic info on holding companies and key subsidiaries like Vishwatma Solar Energy Private Limited and ACE Solar Energy MP. It lists the board of directors, their roles, and other directorships they might hold. Key managerial personnel, KMP, are also listed.
Any recent changes in control or promoter interests?
It confirms no change in control of the main promoter entity, ACME Cleantech, in the last 3 years, and generally states that promoters aren't involved in firms that might have conflicting interests, though it refers to specific disclosures for any exceptions.
Let's touch on the financials again. What are the key highlights presented?
The prospectus provides summaries from the restated consolidated financial information. You get key numbers like revenue from operations, other income, total expenses, profit or loss after tax, total equity, and details of their borrowings for the relevant financial periods.
Does it break down cash flow?
Yes, it typically shows cash flow from operating activities, day-to-day business, investing activities, like buying assets or selling investments, and financing activities, like raising debt or equity, repaying loans. Details of outstanding borrowings are also provided.
And it summarizes those related party transactions we discussed earlier?
Correct. Usually in a dedicated section or note summarizing transactions with entities like ACME Cleantech Solutions Private Limited and others.
Are there mentions of key contracts the company relies on?
Yes, it usually lists or summarizes material contracts and agreements. These would include major financing agreements with lenders, the power purchase agreements, PPAs, with off-takers, significant land lease agreements, major supply contracts, and potentially EPC contracts.
What about legal troubles? Any major ongoing litigation?
The outstanding litigation section summarizes significant legal proceedings involving the company, its subsidiaries, directors, or promoters. This could include disputes with power distribution companies over PPAs or payments, tax disputes with authorities, regulatory proceedings, or even disputes with trade bodies.
Okay, zooming back to the offer itself. What are the core details?
It specifies the total offer size in terms of number of shares and potentially value range, the price band, though that wasn't in our excerpts, it would be in the final document, and reiterates the main objectives for raising the funds.
And who are the banks managing this deal?
The book-running lead managers, BRLMs, are listed. JM Financial Limited, Kotak Mahindra Capital Company Limited, Motilal Oswal Investment Advisors Limited, and Nuvama Wealth Management Limited. They handle the whole process.
And it explains how people can actually bid for shares.
Yes. It outlines the bidding process for different categories of investors, retail, institutional, etc., and the basis of allocation if the offer is oversubscribed.
The prospectus also mentions the company's articles of association. What's relevant there?
The articles are the company's internal rulebook. The prospectus might highlight key provisions related to share capital structure, rules for transferring shares, dividend rights, procedures for board meetings, and shareholder voting rights.
Finally, there's usually a section on consents and experts.
Right. This confirms that all the parties whose reports or opinions are included or referred to in the prospectus, like the statutory auditors, legal counsel, rating agencies, industry experts like Crisell, have given their consent for their inclusion. It identifies the experts involved.
Okay, quite a journey through that document. So to wrap this deep dive up, what are the main takeaways for our listener?
Well, I think we've seen a significant player in India's booming renewable energy space. They have substantial solar operations. They're expanding into wind and hybrid, which seems strategic. They're clearly operating in a supportive policy environment, but one that's also complex and comes with risks.
And those risks are quite varied, aren't they?
Definitely. Project execution risk land, construction delays, costs, financial risks reliance on debt, covenants, market risks dependence on PPAs, potential regulatory changes, and of course the related party transactions need careful consideration. This prospectus lays out both the opportunity and the challenges.
So as someone digests all this information, what should they be mulling over?
I'd say really weigh that massive potential of the Indian renewable market against the specific risks outlined for this company. How comfortable are you with their reliance on government policy and these long-term PPAs? Dig into those risk factors, maybe look closer at the financials and the debt situation, and consider their track record. How well have they executed projects so far?
It's definitely a lot to consider, a fascinating glimpse into the engine room of the energy transition in India. Thanks for navigating us through it all.
Pleasure to be here.
And for you, our listener, perhaps the final thought is this. As India and the world push towards a renewable future, companies like this are right on the front lines. They face immense opportunities, but also significant hurdles. What does their story, as laid out in this prospectus, tell you about the real-world complexities and potential rewards of building that green future? Something to ponder until our next deep dive.